What's up everybody, it's Graham Stephan, and welcome back to the channel. Today we're diving deep into the world of billionaires and uncovering the secrets behind their incredible wealth. Now you might be thinking, Graham, what do billionaires know that I don't? Well, the truth is, they don't have any magical powers or secret handshakes. What they do have is a deep understanding of investing principles and a mindset geared towards long-term growth. We're going to break down these principles into actionable steps that you can start using today, no matter how much money you have in the bank. We'll be looking at everything from compound interest to tax-efficient strategies, and even alternative investments like farmland and fine wine. So, if you're ready to unlock the secrets of billionaire investing and start building your own path to financial freedom, buckle up, smash that like button, and let's get started. One of the most fundamental concepts that billionaires understand is the power of compound interest. Think of it like a snowball rolling down a hill. At first it might be small, but as it picks up snow, it grows exponentially larger. That's exactly how compound interest works with your money. When you reinvest your earnings, those earnings start earning their own earnings, and so on. Over time, this creates a snowball effect that can lead to massive wealth. A perfect example of this is Warren Buffett. He bought his first stock at just 11 years old and has been consistently reinvesting his profits ever since. This disciplined approach to compound growth is a major factor in his staggering net worth of over $100 billion today. So the takeaway here is simple. Start investing early, reinvest your earnings, and let the power of compound interest work its magic over time. Now, you might be thinking, Graham, I don't have decades to wait for compound interest to make me rich. And you know what? You don't have to. The key is to start as early as possible. Even if you can only invest a small amount each month, the earlier you start, the more time your money has to grow exponentially. Remember, time is your greatest asset when it comes to investing. The sooner you plant that seed, the sooner it can grow into a mighty financial oak tree. So, don't wait for the perfect time to start investing. The perfect time is now. Start small, stay consistent, and let compound interest do the heavy lifting for you. Now, let's talk about something that most people don't find very exciting, but is absolutely crucial for building wealth: taxes. Billionaires are masters at legally minimizing their tax burden, and one of their favorite tools is real estate. You see, when you own real estate, you're able to deduct expenses like depreciation, mortgage interest, and property taxes. This can significantly reduce your taxable income, even if your property is appreciating in value. But it doesn't stop there. Billionaires often use sophisticated estate planning strategies like setting up trusts to protect their wealth for future generations and minimize estate taxes. These strategies might seem complex, but understanding the basics of tax-efficient investing can make a huge difference in your long-term wealth-building journey. Another tax-savvy strategy employed by billionaires is focusing on capital gains over ordinary income. Instead of taking massive salaries, they often rely on income generated from their investments, which are taxed at a lower rate. Take Elon Musk and Jeff Bezos, for example. They both take relatively modest salaries but hold massive amounts of stock in their respective companies. When they sell those stocks, they pay capital gains tax, which is typically lower than the income tax they would pay on a large salary. Now, I'm not saying you should quit your job and live solely off of capital gains, but it's important to understand how different income streams are taxed and structure your investments in a way that minimizes your tax liability. Remember, it's not just about how much money you make, but how much you get to keep after taxes. By understanding and utilizing tax-efficient strategies, you can keep more of your hard-earned money working for you. Now let's talk about emerging markets. You see, billionaires aren't afraid to venture beyond familiar territory. They understand that some of the most lucrative opportunities lie in economies that are rapidly developing. These markets offer the potential for explosive growth, and that's something billionaires are always on the lookout for. Think about it. When you invest in a company in a mature market, you're often battling for those incremental gains, those single-digit percentage points. But in emerging markets, you're talking about double-digit, sometimes even triple-digit growth potential. That's the kind of opportunity that can turn $1 million into $1 billion. Of course, investing in emerging markets comes with its own set of risks. Political instability, currency fluctuations, regulatory hurdles, these are all factors that can impact your returns, but for billionaires, these risks are often outweighed by the potential rewards. They have the resources to diversify their portfolios, spreading their risk across multiple investments. They also have access to the best financial advisors, analysts, and experts who can guide them through the complexities of these markets. One billionaire who's been particularly bullish on emerging markets is Ray Dalio, the founder of Bridgewater Associates, one of the largest hedge funds in the world. Dalio has been a vocal advocate for investing in China for years, and his firm has poured billions into the Chinese market. Dalio's reasoning is simple. China is the world's second-largest economy and a global powerhouse in manufacturing, technology, and consumer spending. Its economy has been growing at an astonishing rate for decades, and Dalio believes this trend is far from over. Now, some people might be hesitant to invest in China, given the political risks and the government's control over the economy. But Dalio argues that these risks are overblown. He believes the Chinese government is committed to economic growth and will continue to implement policies that support businesses and investors. And you know what? Dalio's track record speaks for itself. His firm has consistently outperformed the market, even during times of global economic uncertainty. So when Ray Dalio speaks about investing in emerging markets, it's worth paying attention. Now, let's dive into something really interesting. Alternative investments. Billionaires, they think differently. They're not content with just stocks and bonds. They're constantly seeking out unique and often overlooked asset classes that have the potential to generate outsized returns. We're talking about things like cryptocurrencies, farmland, fine wine, even vintage cars. These might sound unconventional, but billionaires understand that diversification is key to building a resilient portfolio. They know that by allocating a portion of their wealth to these alternative assets, they can potentially reduce risk and enhance their overall returns. Now, I'm not saying you should go out and buy a vineyard or a vintage Ferrari tomorrow. What I'm saying is that it's important to keep an open mind and explore different investment opportunities. You never know what hidden gems you might find. Remember, the world of investing is constantly evolving. What worked yesterday might not necessarily work tomorrow. That's why it's crucial to stay informed, adapt to changing market conditions, and be willing to think outside the box. Take cryptocurrencies, for example. Bitcoin was once seen as a fad, but visionaries like Tim Draper saw its potential. Blockchain revolutionized finance. Now Bitcoin is mainstream. Bill Gates invested in farmland. Farmland offers stable returns and hedges against inflation. Billionaires think differently about investments. Let's talk about risk. It's a word that sends shivers down the spines of many investors. But for billionaires, risk is an integral part of the game. They understand you can't achieve extraordinary returns without taking on some level of risk. However, billionaires don't just gamble with their money. They approach risk with a calculated and strategic mindset. They carefully assess the potential downsides and weigh them against the rewards. As Warren Buffett said, risk comes from not knowing what you're doing. Billionaires are obsessed with knowledge. They surround themselves with experts and never stop learning. This pursuit of knowledge allows them to make informed decisions and mitigate risk. Just take a look at Jeff Bezos and the founding of Amazon. Back in the early days of the internet, Bezos was a successful Wall Street executive. He risked it all to pursue his vision of an online bookstore. He quit his job, invested his savings, and convinced his parents to invest. Many thought he was crazy, but we all know how that story turned out. Bezos' calculated risk paid off massively. Learn from Bezos. Believe in your ideas, take risks, and persevere. Let's discuss the power of networking and insider knowledge in wealth building. Billionaires don't just sit alone, refreshing their stock portfolios. They build relationships, attend exclusive events, and join elite circles. This grants them insights into trends and investment opportunities. Think about venture capital firms. They invest in startups early, like Uber and Airbnb, It's not just about venture capital. Networks provide access to off-market deals and IPOs. It's about who you know and the information you access. Leverage networking by attending events and joining communities. Networking is a strategic tool for exclusive opportunities. One of the biggest advantages of a strong network is the ability to tap into the collective knowledge and experience of other successful individuals. Billionaires often bounce ideas off each other, share investment strategies, and even collaborate on deals. Imagine being in a room with Warren Buffett, Ray Dalio, and Elon Musk. The insights and perspectives shared in that room would be invaluable. While most of us won't have that exact experience, building a strong network in your field can provide similar, albeit smaller-scale benefits. For example, let's say you're interested in real estate investing. By connecting with experienced developers, brokers, and other investors, you can gain valuable insights into local market trends, identify promising investment opportunities, and even partner on deals. Remember, building a strong network takes time and effort. It's about cultivating genuine relationships, providing value to others, and staying informed about your industry. But the potential rewards in terms of access to information and opportunities can be significant in your journey to building wealth. What if I told you becoming a billionaire is like making a really good sourdough bread? You gotta be patient, my friends. You can't rush the process. Just like that sourdough starter needs time to ferment and develop those complex flavors, your investments need time to grow. Think of it like this. You're not just buying stocks or real estate. You're buying into a company's potential, a piece of the future. And that future unfolds over years, not days or weeks. It's about riding out the market dips, the ups and downs, and holding on to those investments for the long haul. Remember, Rome wasn't built in a day, and neither are billion-dollar fortunes. It's about consistency, discipline, and letting that compound interest work its magic over time. So next time you're tempted to chase a quick buck or panic sell when the market dips, remember the sourdough. Remember that real wealth, the kind that lasts, is built brick by brick year after year. Let's talk about Elon Musk, one of the world's richest individuals. Did he get there overnight? Absolutely not. He's been grinding for over 2 decades. Think about Tesla. When Musk started investing in Tesla back in 2004, electric cars were considered a niche product. People thought he was crazy for pouring his money into this seemingly risky venture. But Musk had a vision, and he was willing to be patient. Fast forward to today, Tesla is a dominant force in the auto industry, and Musk's early investments have skyrocketed in value. Same goes for SpaceX, rockets, space travel. People were skeptical, but Musk believed in the long-term potential. This is what separates the billionaires from the rest of us. They're not afraid to play the long game. They're not looking for a quick flip. They're building legacies, and that takes time, dedication, and a whole lot of patience. Ever feel overwhelmed by the thought of becoming a billionaire? Like it's this insurmountable mountain you could never climb? Well, here's a secret. Even Warren Buffett started small. That's right. The Oracle of Omaha himself, one of the wealthiest people on the planet, began his investing journey as a teenager with just a few $100s. He wasn't born with a silver spoon. He didn't inherit a fortune. He built it brick by brick, starting with whatever he could scrape together. The point is, it's not about how much you start with. It's about developing the right mindset, the right strategies, and having the discipline to stick with it over the long haul. It's about understanding that wealth is a marathon, not a sprint. So don't get discouraged if you're not starting with millions. Start where you are, invest consistently, and let the power of compound interest work its magic over time. Now let's distill some key lessons from these billionaire investors. First up, diversification. Don't put all your eggs in one basket. Billionaires spread their wealth across various asset classes: real estate, stocks, bonds, you name it. Next, be tax efficient. Billionaires are masters at minimizing their tax burden. They use strategies like tax-advantaged accounts, real estate depreciation, and charitable giving to hold on to more of their hard-earned money. Third, embrace calculated risks. Billionaires understand that risk is an inherent part of investing, but they don't gamble blindly. They assess the potential rewards against the potential downsides. Finally, think long-term. Billionaires aren't playing the short game. They're not trying to get rich quick. They're building generational wealth, and that requires a long-term perspective. Remember, Rome wasn't built in a day. So there you have it, guys. We've uncovered some of the secrets behind how billionaires invest their money. Remember, it's not about luck or being born into wealth. It's about making smart decisions, playing the long game, and never ever giving up on your financial goals. If you found these insights valuable, hit that like button and subscribe to the channel for more content on building wealth and achieving financial freedom. And don't forget to share this video with a friend who needs to hear this. Until next time, stay focused, stay invested, and keep crushing it.